In this video, you're going to learn how individuals, businesses, and families can use these practical tips just like large corporations as well as banks. Your wealth doesn't have to be great in order to get started, but you have to get started if your wealth is ever going to be great. Click the links in the description below for parts 1 and 2 or continue at part 3. Hi, my name is Mike Hero Hieronymus, the founder of Infinite Family Banking, but I'm not the founder or creator of these concepts or principles. Their principles have been used by wealthy families, businesses, and organizations for decades and been utilized through the insurance industry for over 100 years. So business, churches, nonprofits of all sizes can actually utilize this system, and many do. They know that there's money that comes in every week or every month. They have expenses that are going out the door on the other side. If they're a major retailer that sells clothing, for example, they've got to purchase the clothing or have it on payment to whoever their wholesaler is. And then when it's purchased or goes out the door, they got to restock that inventory. Businesses also have ongoing monthly, quarterly, or annual costs. Things like rent, insurance. They have the insurance on the stores, insurance for liability. We all know that whether you're talking about a business or you as an individual, pay insurance for your home if you're a homeowner, health insurance if you pay that not through your out of pocket, if it's not through your employer, and we all pay car insurance if we have a vehicle. So if that's something that that's coming out of your pocket and you're having to pay, well, we all know that if we're talking about insurance, then you can get a discount on paying your car insurance, for example, or your homeowner's insurance, paying it annually. The reason why, there's a cost or value of having that money. Well, if you stored that money into your own banking system, you could earn interest on that from day one all the way to the end of the year. If you're getting a discount, it's saving you money. And if it's growing compound interest, then you're going to still earn more money than what you paid out. Now, what do you do throughout the rest of the year? Do you just sit back and not pay? Of course not. If you have your homeowner's insurance, for this example, paid through your escrow, many people, or at least most people, understand that when they escrow, they pay their property taxes and a little bit more in their mortgage payment that also covers their insurance for their home. So do they pay you interest when they're holding your money for that year or that 6 months to take care of your taxes and your homeowner's insurance? Well, of course they don't. But you could utilize the same system in yourself and take control of the banking uses in your life. If you're like most people, you're not writing a check every 6 months or once a year for those things. Many people that have them as part of their mortgage like the convenience, and I agree. It's very convenient to have your mortgage payment go out and the average amount that you're going to pay for insurance, taxes, all be together, because let's say you got to pay that money anyway, right? Well, if you're going to pay it, why don't you pay yourself and you earn the interest? Now, if you did that 1 year, every month, rather than sending that money in escrow, take that portion of money, whatever it is, put that away in your own banking policy. At the end of the year or every 6 months, depending on when your payments come due, write that check and then pay yourself back. By utilizing the same money and recycling it over and over again, you're the one that's creating that wealth, compounding interest and saving money. So what are some of the other ways that you could utilize the banking system in your life to recycle money? Well, let's think about this. What are all the things that you save money for? We all have a savings account, right? Or should have some money other than what's coming in and what's coming out every week or every month to pay for our expenses and our bills. So let's say, for example, you have a month's worth of income or 9 months worth of income set aside just for emergencies or just in case. Those are funds that, if you're like most people, it's probably sitting in a checking account or a savings account at your bank or credit union. So how much are they paying you on that? Probably next to nothing. If you have that money, the banks don't have that in the vault, in the back, right? They don't have that under lock and key in a safe. So why should you? When you put your money and you give it to the banks, remember fractional lending. They're going to keep 10% of that. They take that other 90% and they can borrow against that to the Federal Reserve, loan it out to you in a mortgage at whatever interest rate, or a car loan that's less than the interest that they're getting from the Federal Reserve, or less than what they're paying interest on that same money. They're using OPM, other people's money. Well, why don't you recycle it? Well, now you can. If you think about some of the other things that you save money for, maybe it's for Christmas, or are you one of those people that just charges it all up on your credit cards and then takes the next 3 to 6 months to pay yourself back, but in the meantime, you're paying the credit card company interest? This is a way that many people, if you, your parents or maybe yourself through your employer, or back in the day, there was the Christmas fund or a set amount that you could contact your employer. They're not going to pay you any interest. But if you want to withhold $25 or a set amount every week, then at the end of the year for Christmas, hey, here's your Christmas fund. That's one way that you could, if you're saving for Christmas and you don't want to pay interest for cash, that's another way that you could do it. Now, some people, when they get their taxes back, they're excited because they have this big tax refund, right? Well, if you're one of those people that enjoy getting this huge tax refund back and you go to your CPA every year or whoever does your taxes, they probably roll their eyes and tell you, why don't you save that money? Why don't you pay less every month in taxes? Because Uncle Sam is paying you a big zero for all of that money that they're holding for free. I know myself, when I was young, for me, that gave me a little bit of comfort, knowing that I had a little bit of extra money coming back, and it was a forced savings account. It was a way for me to guarantee that every check, I had a little bit of extra money that was more than what I owed, so I never got slammed with a big tax bill. If this is you, you can look back at what you've gotten as a return historically over the past, say, 3 years or 5 years. If you're self-employed or if you work for somebody else, that could make a difference on how that money could be saved or where you're making adjustments. So instead of paying that extra $5,000 a year or $500 a year, just divide that by 12 and pay that less in taxes by making those adjustments. If it's something that you can earn interest on every year, it may not sound like a ton of money when you're only earning that interest in 1 year, but let me ask you, how many years have you been working? If you're 20, 30 some years of age and you retire at, say, 65, that's 30 or 35 years of compounded interest. It's free money. It's free money that you can pay yourself because you're recycling it. Once you use that to pay your tax debt, if you have a tax debt, you can recapture that money and save it the next following year. Now let's look at something else that you may save money for that you could recycle. What do you save money for? Maybe vacations? How much money do you set aside for a vacation? Depending on what kind of vacation you take, and depending on how long it takes you to save, might make a difference for you. But let's say, for example, you save up to buy a car. Whether you're purchasing a car and making payments, or whether you're somebody that saves money and likes to pay cash for their vehicles, or at least a big down payment, where are you storing that money? Are you storing it down at the local credit union or your local bank or savings account? Are you saving it under your mattress or in a safe? I like the idea that you have liquid cash for emergencies, but is that the best way to utilize the banking systems in your life to recycle that money? We're going to talk a little bit later, and actually I have a video that's going to be on specifically to have buying a vehicle every 5 years and how much money that could earn you versus what you're paying the other banks. The one thing I want you to know is even if you're somebody who saves cash and pays cash for things, you are paying interest. Now, I know for some people that sounds ridiculous, but remember, what is interest? Interest is money. So if you're not earning interest by saving it in a savings account or leaving it in your checking account, it's costing you money. The reason why I say that is if you could earn a guaranteed rate of interest of 4% and you're only getting a 4% or less than 0.25% or 0.5%, you are losing money. So I want to show you how even if you're paying cash for things, you're actually costing you money and how much money you could earn in buying a brand new vehicle every 5 years. And we're going to show the difference in that video with all the numbers. But let's talk about something else or another way that you could utilize recycling money in your own life. How about kids' back to school clothes? How about anything else that you pay quarterly or annually? If you're somebody that pays for yard service and you're glad that when the winter comes, you don't have those big expenses. There's a lot of people who recycled their money for college by utilizing their own banking system. I've heard story after story about people who had 3 children. When the first one went off to college, they paid back their own banking system the money once they were off in the workaday world. In that 3 to 5 to 6, 7 more years that transpired from when they got out of school to when the next child came, went through college and was finished, they were paying themselves back, recycling that money. Now, some people might think, but Mike, student loans take decades or years and years to pay off. Well, you want to see my other video and click the link in the description below on how you can pay off $100,000 of student loan debt along with credit cards and even a 30-year mortgage in 7 to 8 years. I know that sounds crazy, but it's by using the same money that you're spending today without adding additional money out of your budget. So this isn't the philosophy of go get a second job, sell everything you own, live on beans and rice, and doing without. It's utilizing the same money that's in your budget. It's just using it more efficiently. If you're in the United States and you're an insurance agent or ever had a desire to be in the insurance industry and you like to work with me through my agency and help families or businesses or nonprofits with the information that you've seen in this video, comment in the section below, or you can contact me through Facebook at Mike Hero Hieronymus. The link will be in the description, as well as our Facebook page, Infinite Family Banking. Click the link in the description below to schedule a consultation after watching the webinar and seeing exactly how this would work for you. Everyone's situation is different and their cash flow and their needs. So if we use this as an example for somebody that rents a home, that's not even a homeowner, they rent and they're saving and trying to get out of debt to put a down payment for a home. How can they recycle their money like banks do to be efficient? Well, how a whole life insurance policy works, and again, this isn't like grandma and grandpa's life insurance policy. If you go and contact whoever you bought your homeowner's insurance or your car insurance from, call that agent, that guy or gal is probably going to have absolutely zero idea what in the world you're talking about. This is a very specifically structured, high cash value, low commissioned whole life insurance policy through a mutual insurance company. Now, why do I say it is a low commissioned insurance policy? The reason why I say that is if you bought just a regular whole life insurance policy like you may have, or like your parents bought you when you were a little child, or like they did to make sure that their final expenses were taken care of when they passed away, that generally doesn't gain any cash value hardly at all in the first year and very, very little up through half to over the second year. I'm talking about a specifically structured program that I actually do utilizing the mutual insurance companies that I'm a general agent through. These are structured that day one, the very first day, you have cash value. So if the very first day you want or you need money over and above what's out there, there is availability to have funds. Now, I wouldn't recommend that if you're that close to your budget of putting that into your banking policy. There's other steps and procedures I go through.